The official numbers for June are out, and boy oh boy did the market take a really huge dump. That is as nice of a euphemism as I could honestly give it. I'm not even kidding, right? This is probably one of the worst June numbers ever with record low sales. And we've had almost all the gains we had from 2022 in the early bits almost completely wiped out as the market continues to slide into an official market crash. Now, the market bears are going to be rubbing it in everyone's face, including mine, But there is one silver lining that I could see in going through all this data, and I'm going to tell you right after this intro. Now, as usual, I'm going to break down a lot of the market watch data into kind of digestible tidbits for you in this video and give you the data and each market and each type of asset, semis, freeholds, detached, all that stuff. So you know whether the property you own in which city, right? And how it has performed relative to the rest. Because I know everyone's just curious about it, right? And this way you don't have to kind of take the macro kind of thing you read on headlines and all the data and apply it to your own real estate because it's very, very localized. And if you want to get even a better understanding of how to navigate kind of this market right now, whether you're a buyer, a seller, or an investor, you could book a strategy call with me using the link on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Property. So glad you joined me here. My name's Zen, and I run a Remax brokerage in the Greater Toronto area, in addition to making awesome educational real estate content like this that you're watching for you right now. And like I said in the intro, there's no real way to put this kindly or kind of any good spin on the data that just came out for the month of June in 2020. So let's just get ready to the numbers and look at how bad it is. So first things first, let's look at the market as a whole. The numbers right here. The average price is down just a bit shy of 1.15 mil. It's gone down a whopping 5.5% from last month, which is the biggest drop we've had in the 4 month in which the market's been sliding, right? So the average price puts us back into somewhere in like September 2021 territory. Yeesh, yeah. Yep, we've seen the average price slide by about 15% in the last 4 months. And if this keeps up, we're going to be officially heading into a housing crash, which by textbook definition is 20% drop in price. We'll probably get there probably in the summer. So brace yourself. And I wouldn't be surprised if we saw this in the next 2 months to come, like I was saying earlier, as I'm expecting prices to continue dropping. Now, sales are at about 6,500 or so, down 11% from last month. And here's that silver lining I was talking about in the intro. The active listings is only up 4.3% to about 16,000 listings, give or take, which is surprisingly low given where we are in the market right now and how it feels like a crazy buyer's market. Because the active listings are low relative to the current month of inventory, which is about 2.5, which is up 17% from last month, which actually sounds like a lot, and it is a lot. But I was personally thinking that would be closer to 3, with all the trends and the stories and the talks about recessions that I'm hearing right now, right? So let's break this down a bit more. So if you look at this chart first here, it's the history of active listings in June. And you can see that the active listings is basically at the average point in which we had in the last 10 plus years of about like 15.5 thousand. We're just like a smidgen over, right? And usually with sales this low, I would have expected the active listing count to be higher, but it isn't. And that's because the number of new listings, what I was saying earlier in the intro, the silver lining, is actually trending down right now. So you have a look at the chart here. This is the action from the start of the year in kind of all the key important metrics that I generally like to track. And you can see that you would have expected the new listings to increase from last month to this month, but it hasn't, right? And there are many reasons for this, but like I would say most people who understand the market would argue that it's because sellers who don't need to sell aren't selling, right? And realistic, the people who are selling right now are the distressed sellers, or they need to because, some other reasons. And those distressed sellers are going to be flushed out of the system very shortly. So if you actually look at the history of all the new listings in June, which you'll see over here, you can see that we're pretty much on par with the 10 plus years on average, right? So I'm not too concerned. And we actually have fewer new listings right now than we did in June 2017 when everyone basically put their house on the market thinking the prices were going to drop, right? So while the sentiment is kind of poo-poo right now, the seller sentiment at the moment is better than where it was in June 2017 after the foreign buyer kind of crashed the market. I think we saw about 25,000 new listings there. I'll point it on the chart. Now, that's just an assumption, of course, of the silver lining in this data. Now, let's look at the sales data. You can see on the far right-hand side, that bar is basically a stupid low amount, way below the 10-year average of about 9,500 sales. We're at 6,400, give or take, and we're 30% below the average. That's really bad. So while I talked about, seller sentiment earlier, this data set is obviously showing that the buyer sentiment is really bad. So not many people are buying right now. However, I do have to say though, in the last week, I've noticed a surprising amount of showings on our listings, much more than I would have anticipated, but this is still super, super early. And I'm not saying that we're seeing a rebound yet, but I'm seeing a lot more activity than I was in June. For now, granted it's the first week of July. So take that with all the grains of salt out there. So nobody get excited yet, okay? But overall, the market's still kind of trending downwards right now. As I said in the past videos, I think the earliest sign of some kind of relief, stabilization, and like no more price drop is probably September, give or take or so. Now, if you found this content useful, it generally would mean others people would as well. So if you would give me a hand and smash that like button so it helps share this knowledge out there with other people. And while you're at it, make sure you subscribe so you know when I drop awesome content like this in the future. And as you can probably tell with all the charts I'm showing you right now and more to come later, I'm kind of a big nerd and I can see all of you who aren't subscribed but are watching. So do me a favor, please, and subscribe as I'm trying to get the subscriber count over 10,000 soon. Much appreciated. All right, let's get to the local markets now. Now, before I start, all the charts, all the data, and all the fancy foo-foo that you're going to be seeing going forward from this point on can be downloaded using the link that's in the description below, free of charge. There's nothing there. So if you want to look at this carefully to kind of see how your property did compared to the rest of the market, you can easily go and download all of the data that I'm able to show you just by clicking on the link in the description below and just put in your email and I'll send it to you right away. All right, so with that out of the way, let's look at the 416 first, which is generally Toronto, right? South of Steeles between Kingston Road and 427. And let me be the first to say, holy cow, I did not expect the detached market to drop the way it did. Wow, a 9.3% drop. That brings the detached 416 market, which everyone thought, was a defensive play and, shouldn't be dropping because it's the holy grail of properties in Toronto, but it did. An average price of 1.73 million right now brings us closer to the summer 21 pricing, which is a big time drop. That means it's fallen more than the entire market as a whole with this set of months, this month's data set. So that's a shocker. Now, all assumptions are out the door right now, given what we just saw with the 416 detached market. Your semis dropped about 6%, towns dropped a bit, and your contingents are dropping a little bit. But the condos are holding okay, despite having 3 months of inventory, even though it slipped a little bit last month, and it's down like 2.6%, give or take. Look, this is what I've been saying the last 2 months. If you're ever looking for a time to upgrade to a detached home, now is the time. The detached prices have come down the most compared to the rest of the Toronto asset classes, as you can see over here, which have come down a lot less. It makes total sense because a 10% drop from call it 1.7 million is a savings of 170,000, and a 2.5% drop from your condo, if you're upgrading from condo to a detached, is about 20 grand. That's 120,000 spread if you understand my math. So if you find yourself in this situation and want a better understanding of how to move up the market, you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. All right, let's move to the 905 suburban area market, which is basically everything outside of the 416 market we just talked about. Oh, look, there's some green here. Yeah, condo prices in the 905 did go up a bit last month. It's still down from the peak, but even more resilient than the 416 condo that we were just talking about. Then you look at the freehold homes in the suburban area, and they're all down around like 5%, which includes your detached towns and semis, which is actually the smallest decline we've seen in the last 4 months, give or take, right? Which is surprising, very surprising, given that this month showed the 416 saw the most price decline than the 905. It's quite surprising. Now, let's get into the fun stuff. Again, all of this data you're going to be able to download in the description below, so do not worry if I don't get to your specific asset type and area. You can go figure it out yourself. But if we look at the detached month-over-month number, which is over here, there are a few weird things I want to call out for you. Why did Burlington and Pickering detached prices go up by quite a bit as well? Not really sure. The data set is like quite decent. It's quite large enough so that there aren't many outliers, and I checked. Not really sure why that is. The other thing I've noticed is that you can see in most of the cities, you're sitting at like a decent months of inventory, right? It's between 2 and 3. Most are hovering around that right now, and only a few of them are kind of over 3, which kind of I highlight in red for you. And you can see there's not much red, which kind of tells me that the months of inventory is not increasing as drastically as what most people are thinking, where prices are being forced down, which fortifies the fact that we're not getting many new listings like I was talking about as a holistic market, right? Which, confirms that. The second chart here you can see is just about the same one, but it's just shows you which cities kind of took the biggest price drop when it comes to detaches. And this is from like the peak of the market, which is February. And you can see that Brock, Whitby, and Oshawa are kind of leading the pack right now in the Durham region. Now, the third chart here is a comparison chart I just put in to show you from the peak. The interesting data point here, and why I'm putting this as like a thing for you guys to download, is that the sale price delta column, which is right here, I'll point out. Any of you who want to see potentially how much your home went down in price, if you're a real estate sicko like me, then yeah, there you go. You can go figure it out. It's more localized for you. And some of the dollar volume is absolute nuts, right? If you look at Richmond Hill, it's down like 500 grand on a dollar volume. Like, G-bus, that's a lot of money, right? Now, of course, take these numbers with a grain of salt. Although it's from an average of like 2 time frames, it's not always perfectly accurate, right? Now, I have these same charts if you have a semi and a town. Like I said, you can download it. I'm just not showing it in the video. The link is in the description below. Now, the only other chart I want to call out to your attention is the condo one. And you can see that here, the 416 has the bulk of the condos, which we all knew already. And those, like we said earlier, are holding up surprisingly well, right? Not down too much. Prices aren't going down. But if you look at the condos, which I don't have up here, but the specific ones in the CO1 and CO8 era, which is the downtown core, the price drop from the peak is really also not that bad, right? From CO1, we saw a price drop about 6% and CO8 drop by 3%. Sales are still super weak and inventory is building despite prices holding, which is surprising. Well, but most of these pockets are kind of outperforming most of the other Toronto condo pockets. Granted, like I said, if you bought something now and it hasn't dropped much, which is great, but also if you owned a condo for the last 5 years, it means that you didn't have much gain either in the last 2 years, right? So depends on which perspective you're looking at it. Now, if you look at the condo chart here, right, from the biggest drop to peak, you can see that there are actually some pockets for condos that didn't drop from the peak in the condo segment, right? Which very much explains why we saw a month-over-month number increase in the 905 condo micro market that we talked about earlier, right? And these pockets are Oakville, Oshawa, Whitby. Granted, again, grain of salt, there aren't many condos in that area. So while those are doing better, I would probably say it's because the price point's low and someone just needs a place, right? Anyways, that's a wrap for this month's Market Watch. I'm pretty sure I went way longer than what I wanted to. Granted, I wanted to provide everyone with this kind of lay of the land of what's going on. And I do expect more or less the same to come in the next 2 months of summer. So if you are looking for some additional help as a buyer, seller, or investor trying to transact in the real estate market, you can book a call with me using the link. It's on the screen right here, www.chatzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.